No one knows what the future holds, but what we do know is interest rates are rising and we still have a major lack of supply in the housing market. Stick around and find out what the experts are saying. Hey everyone, it's Cory, your favorite real estate advisor with liveincline.com and Engel & Volkers Real Estate. And in this video, we're going to talk about the facts of what rising interest rates can do to the housing market. You're going to want to stick around to the end of this video and see why I know you have nothing to worry about this year. People are freaking out about these interest rates and the real estate market right now. But rather than freak out, let's talk about how we can move you forward in your life. You don't need to run towards the unknown without help. That's why I'm here. I'm here to help you with this process, so let's work on it together. I spend a great deal of time in the market learning, understanding, and figuring out how it affects my clients. When I'm not working on million-dollar deals, I'm learning. I know what's going on in the real estate market today, not last month or even trying to predict what will happen. What is going on today? Let's look at what experts are saying from the Washington Post to the Wall Street Journal, Fannie Mae, and Forbes. Everyone is talking about the real estate market right now. And I find it's better to start with the facts rather than speculation. We can work with facts. Don't you prefer to have actual evidence rather than guesswork when it comes to your most valuable asset? Let me share 4 facts about our current situation in this real estate market. Fact number 1, mortgage rates have increased. According to Freddie Mac, the average mortgage rate in December of 2021 was at 3.11%. And at the end of March, the average mortgage rate was 4.67%. Fact number 2, the Federal Reserve, or Fed, met last week and unanimously voted to raise the interest rates by 0.5 percentage point. And according to CNBC, this is the biggest hike in 2 decades. According to an article written by the Washington Post, the Federal Reserve has created efforts to tame inflation, and that's what's driving these rise in rates. Now let me clear the air. The Fed does not set mortgage rates, but it definitely does influence them. In the same article written by the Washington Post, they stated that the Federal Reserve holds about $2.74 trillion in mortgage-backed securities, and it indicated it would reveal its plans for reducing those holdings at its May meeting. The more aggressively the Fed sells those bonds, the faster mortgage rates are likely to rise. So, they did in fact talk about this at their May meeting, and the committee decided to begin reducing agency mortgage-backed securities on June 1st, 2022. Fact 3, higher mortgage rates means less buyers can actually afford a home, and less buyers means home prices eventually have to drop. In an article by Forbes, chief economist and senior vice president of the National Association of Realtors, Lawrence Yun, stated that aggressive inflation will force the Federal Reserve to raise interest rates multiple rounds this year and actively pursue quantitative tightening. And that's why the mortgage rates recently have shot up so high. Higher mortgage rates will inevitably pull home sales down in the coming months and slow home price appreciation. Now notice that he said pull home sales down and slow home price appreciation. He didn't say stop home price appreciation. The value of homes is based on supply and demand. And nationally and locally, there are still more buyers out there than there are homes on the market. And last but not least, fact 4. Pre-approved home buyers are now being forced to get pre-qualified again to ensure they still qualify with the increased interest rates. Forbes gives this example. Take a family shopping for around $300,000 at a 30-year fixed-rate mortgage. If banks were offering them at 3.5%, the total lifetime cost of the mortgage would be approximately $485,000, with nearly $185,000 of that accounting for interest charges. Monthly payments would clock in around $1,340. Now let's say the interest rates raised by 1% before the family got a loan, and the interest rate offered by banks for a $300,000 home mortgage loan rose to 4.5%. Over the 30-year life of the loan, the family would pay a total of more than $547,000, with interest charges accounting of $247,000, and their monthly mortgage payment would be around $1,520. This is a couple $100 a month difference and could absolutely stop them from purchasing this home. Okay, so what does this mean for homeowners? Well, it's pretty simple. As rates increase, the buyers who can afford your home are gonna decrease. This is not a scare tactic, just the facts. Buyers right now are still willing to push their personal finance limits to get into their dream house, but that can change quickly. Not due to their desire, but due to the actual numbers. Buyers will start to look at less expensive homes and even stop looking altogether, as their payments would be projected to increase. Right now, it's still a strong seller's market. Buyers still have a lot of buying power and they want to move quickly before school starts in the fall and rates rise even higher. Now is not the time to sit back and wait to see what will happen. We just discussed those facts. Rates are going to rise and buyers will take a break. You don't want to wait until then to sell. Now is a great time to sell with the demand still being high. Aren't you curious to see what you could get for your house? If you give me a call, I can give you a correct assessment on what your house is worth and what it could sell for right now. I have a strong listing and marketing plan, and my numbers speak for themselves. Now, while I can't predict the future, I can tell you that you probably have equity in your home. So why not call me and find out just how much? I'll give you real numbers based on the market facts. Did you know that about 63% of all homeowners with a mortgage in the US have seen an equity increase since the fourth quarter of 2020? And according to CNBC, in February 2022, the average mortgage holder currently has about $185,000 in home equity to tap. Those are amazing numbers. So let's discuss how and when we can sell your house to tap into that equity. The longer you wait, the less likely your house will sell as quickly or for a higher amount. Now, the future may be unknown, but let's work together to create a path to help you walk into the future with money in your pocket and some financial stability. If you're looking to buy or sell in Lake Tahoe, Reno, or Sparks, I'd love to sit down with you and talk through your options and create a plan to help you navigate this market. Don't forget to click that subscribe button, tap the notification bell so you know every time I make a new video. And until next time, stay safe, stay healthy, and stay informed. And remember, I'm the guy who swore to serve you and protect your most valuable asset.